Hey everybody, this is Alex from mytradersjournal.com, and today I'm covering two trades I made. One was yesterday, one I just made this morning at the open. One yesterday I didn't bother posting its own video for because it was just closing a position I already had, nothing too exciting. But here it is, UWM had a July 100 put. Closed it for 35 cents, so with commissions it was 34 that I spent. It was a good bit out of the money. Very long shot chance of it being assigned, but for 35 bucks I went ahead and took it out of contention. Took out the risk and was planning on selling another UWM put, naked put, today or sometime whenever it came back down. But if you look at the UWM chart, it's down right where I thought it would go. I was afraid it would come up here before coming down. I would have mistimed my cheaper exit, but it worked. But come down here, it's right on support, and it might be a good time to sell another put. But I really just don't feel like taking the risk on a leveraged ETF right now. Let's see if I can go by the alphabet here. Where'd I go? Smooth. So I was looking at the other ones out to October. The premiums, if I went for the same strike, the 100 strike, are not too good. I'd only get around $3, which is not a good return. Could go up to the 105. It's a better return, but only about 10% annualized. If I got somewhere in the 340 range, maybe I could probably get maybe 350 if I'm lucky. It looks like it's kind of slanted that way, but I don't think it's really going to be the right one for me, so I'm looking elsewhere. Anyway, that was yesterday. Today, I had an order for TLT for a call spread, or what they have listed here is a call bull spread. I sold it, so the way I traded it was more of a bear spread because I went with the reverse of it. Put the order in yesterday when the bid ask had it sitting around maybe 48 cents that I could have sold it for. I put the order in at 50 thinking futures were up on TLT this morning. I'd reverse it. I didn't get around to it. I was busy this morning before the market opened, and sure enough, as soon as the market opened at 9:30:01, my order hit 50 cents. I sold 6 of the combinations, and it hit kind of in a weird fashion. I mean, it was all 50 cents. That's what it should be, but 3 of them hit at selling the August 129 calls at 129, and 3 of them hit at $1. It averaged out because the ones that hit for 119, the hedge I have on it at the August 132 that I bought was at 69 cents. Same with the dollar, went for 50 cents on the long calls that I bought. So altogether, it's still 50 cents. It doesn't really matter that much. The total I received is $292.68 after paying a whole $732 in commissions. There's definitely a lot of commissions for those of you who haven't done some of these cheap call spreads. You know, you're paying commissions on both sides of it and doubling up. So I'll even expand it again. $250 on one and $477 on the other, which is odd to have that much difference, but you can see some went through Amex, some went through PSE as far as the exchange. Different commission rates, that's how it goes. My idea on this one, I don't need UWM anymore. Idea on this one is that I don't think, remember my short side is 129 on this, so I don't want it to go above 129, or more specifically 129.50 to make sure I don't lose on it, not counting commissions. It would have to go, this is just the 3-month chart on TLT. I'm going to extend this kind of timeline here to give us a look all the way to August expiration. If it follows this trend line, I'd be safe right around expiration, which is, what is the actual, the August 18th. So around here, it would be under 129, I'd be good if it stays on that trend line. As luck would have it, it actually jumped above that this morning. I'm assuming it'll fill the gap a little bit and it'll be okay. It could follow another trend line here and I'd be in trouble if it goes all the way back up to, I'm going to make this longer, goes all the way up to previous highs seen last summer. I'll even, let me go back. I'm going to go back a few years here. This is weekly. I don't need to have the shorter timeline here anymore. Oops, if I can grab it there, pull us back to the end. Last summer, this is where I got in trouble playing with TLT. And I'm saying playing with intentionally because I didn't really do it on a good investing strategy. It was too much of a gamble for what was good. I went in, for those of you who've been reading my blog for a while know, I went in with too much risk. I didn't hedge it. That's why I hedged this time. I have $3 in between 129 to 132. The difference is $3, obviously. And so I went in with a little different approach this time. I just want to nibble on getting a little extra money. If I can start doing these once a month, and I can get in an extra almost $300 a month, I'll be happy with that. 300 times 12. Everybody knows that is not a small amount to add on to my $100,000 balance, which would be nice to have an extra few percent. Seems like a small amount, but it adds up quickly enough if I repeat it every month successfully. So this is going back. It topped out at 138 back in 2015, and then last year at 143.59. What would really be great for me, I went out 2 months because this streak, this whole run could last even a couple of months. I don't think it will, as interest rates continue to rise, but it could. So if that's the case, then my long calls would come into play. And what I did before when this happened to me and I was hedged like I should, I sold the long call for a profit, stayed short, took the assignment, and then wrote it back down and made a good bit of money. I'd like to do that again this time. Would even be better, or ideally, it would close around 128.99. I would take a full profit and wouldn't worry about it. Just repeat it at a higher strike and make more money. But it is good to have some coverage there, so I don't miss out. Right now, the trend. Well, I'll go back a little bit further. Let's see if I can get this where I want it. So the trend was coming down. This is going back from last summer all the way down, and we just moved above that a few days ago. Excuse me, a few days ago. I'm on weeklies. A couple of weeks ago, we moved above that. So the risk is we've broken the downtrend. I say the risk because I am betting that it's going to stay short. So then I start looking at the shorter term ones. Let me switch back to shorter time frame on the daily. And I have a lot of trend lines, so sorry about that. This is, I don't need this to duplicate here. I'll leave it for now. It's even above the short-term trend line here that was higher highs. It jumped above that when I did it. It messed up when I did the weeklies. So around there, let's get the point. Moved above that, but it crossed over it enough this week. Now it's jumped up some. This one here is what was a trend line of higher lows. Then now it looks like it's become support in here. So that's going to be interesting. I have an alarm here to point out to me if it does start dropping below that trend line, I'll know it. Same here. If it drops way down here, I'll know it. I'm not sure I'll change anything on it. I might add some more calls. We'll see, but it'll be a decision at the time because I want to see what's going on with the market and why it's doing that. For now, I think there's just a little bit of fear. Even looking at S&P 500, it's down 8.35%, a third of a point, 34%. Not bad, but it's going in the opposite direction as it should. When bonds are up, stocks should be down. So this is going to be one to watch. I don't want it to get way up here to 129. I have some time. I'd like it to do what it's done before, kind of jump up, cool down, jump up, cool down. If it cools down, that buys me that extra time I need to let the time value erode my expense there of the short call or my risk there. So that's it. I only did 6 this time in their hedge, so I have a lot of room to do more. Even if I was assigned, like I was mentioning, if I take a profit on the 132, if it really spikes, If it goes back up to 140, I'll take a nice profit on the 132 long call, and then take the assignment on those 6. And my account, I have enough in my account to take 600 shares short and pay the dividend on that, or the interest on that every month, which is not fun. But if I'm selling puts, it's okay. It pays for itself while I wait for it to come down. All right, so that's it today. It's a little different trade than I usually make on anything but TLT. I do like to repeat this trade a lot because I've had good success with it outside of the second half of last year where I got smashed on it. So I stayed out of it too long, missed some opportunities, now back in, and we'll add to it if even if it gets up into the close to 129 again, I might add to it and sell another 6, again still hedged, but at higher strikes, and kind of work itself up until something works for it. But I'll have time as long as I'm hedged. So that's it today. Let me know if you have any questions, because this is a different trade than I usually make, or that y'all have seen since I've been doing the YouTube blog or vlog. And send me any questions, leave comments, whatever works for you. And if you haven't, of course, subscribe now. Thanks for watching.